Okay. I want to welcome everybody to the special call meeting of the CERS Trustees Board for April 30th meeting. I want to call the meeting to order. Eric, do you mind to read the opening statement, please?
Sure. This is a special meeting of the County Employees Retirement System Board of Trustees. This meeting is being broadcast via video teleconference pursuant to KRS 61826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It is also being broadcast to the public live via Facebook. If you are speaking and not appearing by video, please identify yourself before talking. If the video or audio broadcast is interrupted, we will attempt to reestablish a connection. Connection cannot be reestablished within 30 minutes. The meeting will be adjourned and rescheduled to a later date.
Thank you, Eric. Sherry, if you will take the roll, please.
Yes, sir. Mr. Cheatham,
Here.
Dr. Carver,
Here.
Mr. Foster, Mr. Fulkerson, Dr. Hackbart,
Here.
Dr. Milkman, Mr. O'Mara,
Here.
Mr. McGraw, and Mr. Webb.
Here.
Thank you.
Being a quorum present, we'll go ahead and begin. Sherry, I understand there's no public comments. Is that correct?
That is correct.
I simply want to begin by apologizing for the meeting getting started a little later. The previous meeting went a little longer than expected. At this point, I'm not sure that there's a lot for us to look at simply because we don't have the 6-member quorum that's required to either ratify or adopt a investment recommendation at this point. However, Dr. Hackbart, I'll leave this to your discretion if you want to kind of update the members that are here as to where we stand, and then hopefully by that point in time, Steve or Anthony will be able to join us, or the folks from Wilshire are here. Sorry, Mark, I didn't see you there for a second.
Well, thank you, Mr. Chairman. Certainly, as you suggested, we just completed a few moments ago a special called meeting of the CERS Investment Committee to hear and to discuss a recommendation of staff, the investment staff, to make an additional commitment to the investment with Kraken Resources, Kraken. We had a very in-depth discussion, a very lively discussion, and an excellent presentation by the staff about this particular recommendation. We considered a number of factors. We can talk somewhat about the industry itself. We talked about the real return, this component part of the real return. We're roughly in our current asset allocation at about 7%. As I understand, the staff recommendation was for an additional 100 million commitment, which would be the same as K would be making a commitment for as well. They are more under committed to real return than we are. We're close to our asset allocation commitment of 7%. If we went with this recommendation, we would, and if all the capital was called, we would actually be above our asset allocation recommendation of 7%. And I think Anthony and Steve suggested we'd be around 7.5%, so slightly above our portfolio recommendation. We talked about a number of issues in terms of real return, talked about the potential comparison of this potential real return investment versus other options or opportunities that might exist for us to invest in the real return category. Wilshire made some brief comments in that regard. And anyway, after our discussion and back and forth, some concern about the fact that we have a very short time fuse, because we really have to make a decision today, if I understand right. Because if we don't make a decision to invest in this particular opportunity today, it will pass us by. After our discussion, we talked about whether or not we were going to make a recommendation to the full committee. we failed to get a motion to proceed and to make a recommendation forward to the full committee. So in effect, we are moving this recommendation to the full committee without a recommendation from the investment committee. For a variety of reasons, which we can discuss, but basically we'll proceed forward if we get Steve and Anthony aboard so they can talk a little bit more about the same issues we talked about in our investment committee meeting. So that's sort of an overview. I'm not sure, have they gotten on board yet, or?
Yes.
They're here.
Okay, good. Okay, well, Steve and Anthony, thank you for your presentation at our investment committee, and I'll just turn the program over to you to discuss this investment recommendation for the full committee. And I appreciate your work that you did on this, and also your presentation a few minutes earlier, but please proceed.
All right. Well, thank you. Appreciate everyone's time. As Dr. Hackbart, I apologize for being a little late. The last meeting ran over. As Dr. Hackbart may have mentioned, in October last year, the investment committee approved and the board ratified the recommendation to roll a portion of the plan's investment in the Kane Anderson Energy Fund 7, which was a 2015 vintage private equity fund, into the Kraken Resources Continuation Fund. And at the time, we noted that while we were interested in increasing our investment in the strategy, unfortunately, there wasn't any available capacity as the fund was already oversubscribed. So we've been continuing to do due diligence, reference calls, work on with internal and external legal on legal docs. And why we brought this recommendation was it has characteristics that we think make it a compelling investment opportunity in the real return space, including a very differentiated strategy, we believe, with favorable expected risk-adjusted return and asymmetric upside potential. It has very low return correlations to the existing investments in the real return portfolio, as well as to the broader overall public and private portfolio. The strategy has a significant distribution yield profile that allows the investment to materially de-risk over a relatively short time frame, which also provides high levels of current income. It also has a shorter funding window, so a significant portion of the capital that would be committed would be called relatively quickly. As we have noted, especially with private investments, it can be several quarters to several years before significant portions of our capital is called and invested. So this would get us invested relatively quickly. We did discuss that the real return asset class is very broad. There's not a universal definition or what's included in that asset class. And so we look at a wide range of potential investments and strategies as our opportunity set. And that's across, as we talked about, infrastructure, listed, unlisted, natural resources, commodities, real estate, transportation, energy. And Dr. Hackbart mentioned currently the CERS portfolios are 150 to 140 basis points underweight to their real return targets, and that's on an invested basis. If all of the committed capital, including this recommendation, were called immediately, all of the funds would be about at 8%. But we also noted that includes roughly 65 basis points that's in Prisma, that's tied up in litigation and is essentially invested in cash. It is not an actual real return investment. So that's something that's, depending on the outcome of that litigation, we would recommend reclassifying into our core cash allocation. Again, it's invested in cash. It's not a real return asset. Also, about 25 basis points of the existing invested allocation is in very small runoff strategies, so legacy strategies that are at the end of their term, certainly past their investment period, and are in the process of winding down. So that's what we discussed at the investment committee. I'm happy to turn it over to Anthony there and then answer any questions.
Yes, thanks. As some of you might remember, you guys did approve the continuation vehicle for an asset called Kraken, and that was back in the fall, and that is a position in this Fund 3 as well. And the overall fund isn't just one asset, it has two right now, and they will back 3 to 4 other teams that are looking at different basins across the United States, diversify the exposure across geographically. And again, a reason that we were interested in this strategy is because it provides less some lower correlations to our other public market exposures. It also has a significant yield on it, cash flow that gets you back. See from the chart here, from that continuation vehicle in November, we've already gotten about almost 14% of our cost back in about 6 months. So these assets are already producing. This isn't like like some of the previous strategies that were committed to by predecessors that were more kind of venture focused, finding asset and buying acreage, backing teams to buy acreage and explore and hopefully prove up the asset and then sell it on to somebody else. This is kind of doing the opposite. It's actually taking non-core assets off some of the bigger public companies and then developing them and reaping the production and cash flow from that. And so that's something that we found attractive. They also hedge out the commodity risk of 3 to 5 years out, about 80% of production. So right now they're hedged in the 70s, which is well above current prices. Obviously, prices can be volatile here, but having the rolling hedging program makes the characteristics of this look a lot more like fixed income, since you can already have visibility on the production and on what the hedging is at. So those are some things that we found attractive, and also why it's in real return, because you have contracted cash flows. So that kind of cash flow stream helps diversify against the rest of the portfolio, which can be pretty volatile. So I think I see it was asked how to compare the yield to some of our other things. The rail car fund is a decent yield, probably in the mid single digits. The maritime barge leasing fund that you guys have approved is in the high single digits, and then this is in the lower double digits. They target 2.5x 25% gross on all their investments, which is a 2x 20% net. I mean, we'd be happy if they make that. That's not our base case or thesis. If they make, I think if it was a sustained full 5-year period of $55 to $60 oil, even with the hedging, even with that low amount, which is not economic for a lot of producers, I think, with the hedging and the assets that they have and the basis they bought it at, that's still a low double digit or high single digit return, which is again what we are looking for in this kind of portfolio, of lower risk cash flow streams and good yields. And so that's why we recommended it. I'm happy to take any other questions, or if Steve has comments too.
No, happy to take any questions.
Steve or Anthony?
Anybody have any questions for Steve or Anthony or Chris or Mark from Wilshire? Okay. I don't want to take up everybody's time. As I mentioned earlier on, we have to have, while we have a quorum to have a meeting, we do not have the required 6-member or more members present in order to choose to move forward or to pass on this investment strategy at this point. So at this point, Dr. Hackford, I think we're at a point that we're just going to have to pass on it and move forward with whatever else presents itself.
Lau, could I just ask, this is Pat Carver. I wanted to just to ask, what were some of the issues? Because obviously you all weren't excited about investing in it. So I was just wondering, what were some of the issues that you all saw?
I'll give you my top 2 or 3, and Dr. Hackford and Bill certainly welcome to add or whatever. But I think the first concern that we had as far as the investment itself is just where we are in the whole energy industry. In your package, you should have seen projections based on prices for oil and gas, and as both Steve and Anthony pointed out, yes, Kane does try to hedge against the commodity issue, but it still affects the overall return if oil prices and gas prices are subdued for a significant period of time. The other issues that stood out to me was, number one, the short time frame that we were given to look at this, which I think you can see that as an issue just because, you know, we got 5 members on the investment committee and we were only able to get 3 of them on there because of, you know, commitments that the other 2 had elsewhere. Same thing with this meeting. The other part that concerned me is our investment advisor Wilshire was not provided the information to give their thoughts and recommendations and opinions on it as well. So those were the things to me that you know, I'd love to sit here and tell you I'm an expert on oil and gas or anything else, and I certainly am not. So I just, you know, I rely on those experts that look at these things every day. And, you know, I put a lot of faith in what Wilshire and their people, you know, they've got, I forget what the number is. I'm sure Chris can update us, but, you know, better than $2 trillion under management overall. So they certainly must know something about something. So those were the key things to me that I just wasn't comfortable making a motion or recommending, you know, to move forward. I just had a lot of questions that were unanswered.
I think that's a good summary of our conversation. We did talk about a few other issues, such as certainly the volatility of the energy industry at the current situation. And we talked about the pricing of gas and oil. Sort of the break-even point apparently is at around $60 a barrel. Right now, the market is below that, partially due to domestic conditions and also what's happening with the Middle East policy. And given what's happened in the economy, it looks like apparently we just had a report that we actually had negative growth in the first quarter of this year. So that's not necessarily a good situation in terms of the demand for energy.
Don't read too much into that one. That was inventory driven.
Right. And
that
so
was all
forth.
inventory.
So I think there is some concern about the economy as we move forward. And so I think there was some concern about that. Plus, as suggested, the time frame was a little bit challenging, and of course we had difficulty getting in the full committee together. So we just didn't feel that we could make a positive recommendation at this point in time. I think that maybe is where we were in response to your question.
Bill, anything you want to add? I got the shake of the head. I understand. Okay. Again, like I said, we don't have the 6 members required to you know, move forward with a recommendation or make the investment one way or the other. So I apologize for taking up your time at this point, but hopefully the next opportunity that comes up, we'll have a little bit more time to deal with it and get everybody together and make them aware of what we're looking at. So with that, I'm just going to declare the meeting adjourned at this point unless somebody has another question or comment that they'd like to make. Okay, hearing none, again, I apologize for taking up your time this afternoon. Hopefully we'll find other opportunities soon, and I look forward to meeting you all the next time we have a scheduled meeting. Sean, if you want to take us offline.